One widespread misconception about investing is that it takes a lot of money to get started. This may be true at times. To deal with financial planners and investment consultants, customers often need to have a significant amount of money to invest. While certain ventures demand a large sum of money, you may start investing with modest sums of money. In reality, after you hit $1,000, you have a wide selection of investing alternatives. You may start a productive investment path and develop your fortune for years if you save up this much money. Hello and welcome to today's video. Suppose you have $1,000 and you wonder how you would invest. You are in the right place if that's the case. In this video, we will give you 10 simple ways that can make you a ton of money passively. Before we do that, a sub to the channel will be highly appreciated. Number 1. Use a Robo-Advisor. When you just have $1,000 to invest, the expenses associated with active management may be difficult to stomach, particularly when performance frequently trails that of passive index or ETF solutions. However, robo-advisors such as Betterment, Acorns, and Asset Builder have entered the market, promising active management at a cheaper cost than human fund managers. Traditional financial planners, such as Fidelity Investments and Charles Schwab, have jumped on the AI bandwagon for some of their services. You may get the advantages of active management, like more frequent portfolio rebalancing during market events, without paying the standard fee. Number 2. Invest $1,000 in a single stock. This is for the individual who enjoys exclaiming, "I'm all in," during a game of poker. A single stock purchase using an online brokerage may be made for under $1,000. Although you lose money in the transaction, the correct stock may repay several times your investment. In the previous 5 years, a $1,000 investment in Meta, formerly Facebook, Apple, Netflix, or Google, has more than doubled or tripled in value. The caveat is that you'd have to time the market and have already profited from it. However, analyzing a company and investing $1,000 in it might be profitable. Of course, you may lose money or get a lower return than if you buy in an ETF that includes the same stock but is still worth the risk. Number 3. A high-yield savings account and emergency fund. Although it may not be as thrilling as investing in the stock market, placing your money in a high-yield savings account is one of the best money moves you can do if you haven't already. Putting money aside to start establishing an emergency fund will help you avoid unforeseen costs. A good rule of thumb is to save away at least 6 months' worth of spending to cover unexpected costs like losing your job, auto repairs, or medical bills. Although $1,000 isn't enough to get there, it's a good place to start for your emergency fund and may help you avoid financial trouble in the future. Putting $1,000 in a savings account won't help you develop money quickly. However, having cash on hand in case of an emergency is critical, and $1,000 is a great place to start if you're still developing your emergency fund. Trade options and Forex with $1,000. When it comes to $1,000 investments, there's a considerable difference between can and should. $1,000 may be used to create online options for Forex trading accounts, and these accounts can allow you to leverage your money to generate huge profits in a short period. However, just because you can do something does not imply you should. Forex and/or options trading, of all the investments we've looked at so far, has the biggest risk and largest chance of losing all your money in a short period. Some individuals are likely to have struck it rich by doubling their money on a single currency deal based on a hunch. However, many of these traders have undoubtedly lost $1,000 or more in the process of learning their trade. At the very least, use simulators to practice these forms of trading before risking your hard-earned money. Number 5. Invest in real estate. Another avenue to invest $1,000, which may come as a surprise to you, is in real estate. It used to be extremely costly to invest in real estate. Purchasing a rental property usually requires a large sum of money. Furthermore, many crowdfunding platforms are only available to accredited investors, who must have a net worth of at least $1 million, an annual income of $200,000, or a married couple's annual income of $300,000. Real estate investment trusts, REITs, on the other hand, allow you to invest in real estate with as little as $1,000. REITs only invest in income-producing assets through acquiring real estate, making loans, or purchasing pre-existing mortgage contracts. REITs must also return at least 90% of profits to shareholders in the form of dividends. Finally, because of the 90% requirement, REITs are a great method to diversify your portfolio with real estate while still earning dividends. Number 6. Peer-to-peer lending. P2P lending, often known as person-to-person lending, is lending money to people or businesses in the same way that a bank would underwrite a loan. You earn interest payments in return for lending money. The amount you earn is determined by the loan's degree of risk and the duration of the loan. Because you lose your cash if a borrower fails on their payments, P2P lending is perfect for riskier investors. Many P2P lending organizations allow you to acquire notes, which are shares of specific loans, to lessen risk. You prevent yourself from losing your whole investment if a single borrower defaults by spreading your investments over many notes with varying risk ratings. 7. Invest in small business through bonds. You've considered investing in bonds if you're searching for a somewhat secure investment to use for retirement planning or other long-term investments. A bond is a kind of financial instrument that allows companies and governments to borrow money. When you purchase a bond, you're basically agreeing to finance debt for a specified period. Bonds feature a set rate of interest, and the borrower must repay the whole principal at the end of the bond period. Bonds are a safe investment in general since the risk of a borrower defaulting on a loan, such as a government agency, is minimal. Investing in bonds has several drawbacks, despite its safety. For starters, bonds offer a lower rate of return than stocks on average due to their safety. Bonds may also have extended maturities, which means you're putting your money away for years at a set rate of return. If inflation rises, your bonds may end up losing value. If you're ready to accept a fixed income and don't need your $1,000 for the duration of the bond's term, bonds are still a good investment. Number 8. Alternative investments. Alternative investments are a realistic choice for investing $1,000 provided you accept a lesser degree of liquidity and a higher level of risk. One example is investing in art. Buying great art used to require a large sum of money, which was out of the reach for most first-time investors. 9. Start an online business. Making money online has several benefits, one of which is that there are typically low obstacles to entry. After all, the online world is your oyster as long as you have a good internet connection and a computer. It's no different when it comes to starting an internet company. Unlike conventional brick-and-mortar companies, which include overhead expenditures such as rent and personnel, many internet enterprises offer inexpensive starting and operating costs. Furthermore, there are a variety of online business ideas that appeal to various talents and sectors. Begin by thinking of company ideas that are relevant to your current talents and seem appealing. Once you've chosen a concept, regard it as a side job that you can do in addition to your regular employment and build it over time. If the money you make from your side company starts to grow, you may want to leave your job and focus solely on your business. 10. Buy a course. If you're searching for a different method to invest $1,000, putting it towards your education is a viable choice with life-changing possibilities. Unlike a traditional college degree, which may cost tens of thousands of dollars, you can increase your skill set by taking inexpensive online courses on any topic. If you're having trouble finding work or want to acquire a new skill for a company concept you've had, online classes are a good option. For instance, Udemy is a low-cost course site worth checking out. You may acquire specialized skills such as a new programming language, graphic design skills, web development, data analytics, photography, cybersecurity, and languages for under $20. Spending money on a course, on the other hand, might be one of the most powerful investments you ever make when you consider the income-generating potential of learning new skills. At the end of the day, investing does not have to be complicated to comprehend. In reality, thanks to the power of technology, there are more investment alternatives than ever before. Your $1,000 investment is unlikely to make or break your future on its own. However, one of the smartest financial choices you can make is to begin investing as soon as possible. Where are you going to invest your hard-earned $1,000? Let us know in the comments. That will be all for today. Leave a like if you enjoyed and remember to subscribe to the channel. Until next time, stay safe and stay tuned.